Hello students, today I'll be taking up session 56 from the topic set off and carry forward of losses. So here in this particular session I'll be discussing about few miscellaneous points. If income from the particular source is exempt from tax, example, income exempt from tax under section 10, loss from such source cannot be set off against income chargeable to tax. What you are supposed to keep in the mind here is that if there is any income from a particular source which is exempt under section 10, whatever the incomes which are exempt under section 10 have been clearly discussed in the previous sessions. So you can just go through those sessions on my YouTube channel to understand as to which all the incomes are exempt under the tax under section 10. So if loss from any such source is arising, and that cannot be set off against income chargeable to tax. It is to be noted that no option is available to an SSC to set off a loss or not to set off a loss. So it is very important to note here that there is no option available on the hands of the SSC to set off a loss or not to set off a loss. Next you have dividend income is always taxable under the head income from other sources. Consequently, the dividend income on shares held as stock in trade or investment is taxable under the head income from other sources. However, for the purpose of set off of business losses, dividend on shares held as stock in trade is treated as business income. Although such dividend income is taxable under the head income from other sources. Like dividend income, interest income is also taxable under the head income from other sources. Consequently, the interest income on the amount held as stock in trade or investment is taxable under the head income from other sources. However, for the purpose of set off of business losses, interest income on the amount held as stock in trade is treated as business income. Although such interest income is taxable under the head income from other sources. If nothing is mentioned about business losses, these losses are treated as non-speculative business losses. So here, if there is nothing mentioned about the business losses, whatever these losses are treated as non-speculative business losses. Carry forward and set off of business loss other than speculation loss. So the business loss other than the speculative loss can be carried forward and can be set off against the profits of the SSC who incurred the loss. However, this rule has the following exceptions. Accumulated business loss of an amalgamating company. Accumulated business loss of an amalgamated banking company. Accumulated business loss of a demerged company. Accumulated business loss of a proprietary concern or a firm when its business is taken over a company. Accumulated business loss of a private company. Accumulated business loss of a amalgamated demerged cooperative bank. So, speculative transactions. What do you mean by speculative transactions? Speculative transactions means a transaction in which a contract for the purchase or sale of any commodity, stocks and shares is periodically settled otherwise than by the actual delivery. In other words, if there is a contract for purchase or sale of an article, it would be a speculative transaction. So, with this I end this session 56 on the topic set off and carry forward of losses. Thank you.